Hey everyone, just Vice here. So if you've ever wanted to start investing, or even making your money work for you, or heard of these terms and always thought, hey, why don't I start something like that? I think you've come to the right place. I'm going to walk through a couple of steps that I personally took before beginning any sort of investments. And if you guys enjoyed today's video, please give me a thumbs up, subscribe if you already haven't, and let me know what you think so that I can make future videos similar to these. The first thing you want to figure out is if you're ready. This can mean if you have any outstanding debt or outstanding balances that you need to pay off first, or if you have an emergency fund set up. Now for me, what that meant was ensuring that my student loans were paid off, I had to make sure that I didn't have any credit card balances, and that I established an emergency fund. Now, an emergency fund for me meant ensuring that I had enough money to cover 6 months worth of expenses. For me, that meant my car payments, any sort of expenses related to the gym once upon a time when I went, and then obviously food and all that good stuff. Now, once I had an emergency fund ready to go, I knew that I was ready. As soon as I figured out that I had my emergency fund ready and I was comfortable taking on this new investment strategy, I had to figure out what were my goals. Did I want to make a quick buck every so often, or did I want to hold on to it for quite some time so that I could watch my investments grow? But anyways, I wanted to make sure that I could have some long-term growth in my investments, but also some short-term ones here and there that I could watch every so often. You want to ensure that you have a well thought out strategy, whether that means you want to be a growth investor, meaning you want to beat the market over time and ensure that you're making the best trades so that you get the best return for your buck, or if you want to be a passive investor. A passive investor is typically someone that throws a bit of money away or makes monthly contributions towards an index fund or some sort of preset portfolio where options are typically limited to whatever is already pre-cut out. For me, I wanted to have a bit of both going on. So I had a long-term strategy with ETFs and other index funds that I had set up for the long term, but I also had my short-term goals that I wanted to achieve as well. You want to make sure that you're able to capitalize on any tax-sheltered accounts. These range anywhere from a TFSA, an RRSP, an RESP, and where those differ is the timelines for withdrawals and also what your goals are. For me, for my long-term portfolio, I knew that I didn't necessarily want to touch it anytime soon, and the added benefit of using an account such as a TFSA was that any income that I incur as far as capital gains go or any sort of dividends go, I wasn't going to be taxed. So the first thing you want to do if you want to capitalize on these tax-free savings accounts or any sort of tax-sheltered accounts is that you know how much you can contribute up to. And that information you can find on the CRA's website, and it's very easily accessible. And step 4 is all about diversification. Now that you know what your goals are, you know what kind of a strategy you want to follow, you've capitalized on your tax-sheltered accounts, you want to think about making the best decisions. And me personally, I like diversification because say the market takes a hit on my short-term portfolio. My long-term portfolio that's essentially tracking the market is going to offset any sort of loss that I have in the interim. And whenever you're looking at a diversification strategy, I like to think of that as buying one Apple stock versus buying a whole index fund that tracks the top performing tech companies. With the top performing tech companies, I could essentially get an ETF that has a portion of the Apples, the Microsofts, and everyone of the world and offset a bit of my risk. Now, with diversification, it is a little bit of a given that that more diversified ETF won't be making as much as, say, my individual Apple stock would, but at the same time, being able to have a bit of the specific stock as well as a handful of stocks allows me to spread my risk across the table. Now that we've picked out what our strategy is, what accounts we're going to use, and we've diversified our picks, we want to make sure that we're not just blindly picking and choosing. You want to do your research. Whether that means going and reading all of the headlines for the day, or following BNN, or watching CP24's headlines at the bottom, you definitely want to make sure your research is valid. And for this, I would be wary of any sort of biases that those news outlets have as well. At the end of the day, everyone has some kind of an agenda, so you want to make sure you're doing the most research as possible because it's your money. Now, we know that the power of your dollar often decreases on a year-to-year basis by this thing called inflation. Approximately 2.2% less every year becomes the worth of your dollar. You could easily throw that money into your savings account, but you're probably not making that much interest, where banks typically charge anywhere from 0.02 to 0.05, maybe even on the odd case, a 2% promotional balance. But chances are that money isn't working as hard as it could be if you were to diversify it elsewhere. This is probably the biggest reason that drew me towards wanting to invest. I saw my money being compounded through my investments because of my dividends being reinvested or with my actual stocks gaining value. Compound interest was something that I really saw making my money stronger over time. So a year after graduation, I'm fairly confident that my money is doing a lot better than sitting in my savings account. I've done my research, I've strategized as far as what I want my money to do. I've continuously looked into different investment strategies and different investment portfolios, and I've made sure that I'm always aware of where my money is and how it's working for me. So if you guys enjoyed today's video, please do give me a thumbs up, subscribe for next time, and let me know in the comments below if you found this helpful or if you'd like to see more videos like this. Thanks, and see you guys next time.